This trading strategy made me over $2,500 in less than 20 days, and in this video I'm going to explain you exactly how it works and why you should implement this method in your trading style. And just before we start, remember that in the description we got a nice 10% discount coupon so you can get Forex Tester Online for a cheaper price. And remember that if you get the lifetime, you'll have Forex Tester Online for all your life with all the new updates, with no extra fees. So let's start off with the back test, and we're going to be testing on the euro against the dollar in the 5-minute time frame, and we're going to be using two indicators incorporated in Forex Tester Online that are the fair value gaps and the psychological levels. If we come to indicators, we'll be able to find them here in adaptive. We've got the fair value gap and the psychological levels. So first thing we need to do is come to the fair value gaps and click remove filled rectangles, because obviously we don't want to use fair value gaps that's already been used. So now we got that out of the way, we need to come to the psychological levels, and in here we are going to come to level step multiplier. In this case we're going to set it to 1, so I will have 10 pips of distance between each psychological level that have the double and triple zeros. Okay, so we're going to focus on these, especially on the double zeros, because they're the ones that the most appear. And now we know this, we need to understand why we are using these two indicators combined together and how we can get the confluence behind them. So the theory behind the psychological levels is that all the transactions that are made between these psychological levels end up being completely thrown out in one of the two levels. So if we get a high volume candle between, that means that there's a lot of transactions made in there, they'll probably end all in one of the psychological levels, and this can cause a reaction of the price that we can use in our favor. And here is where the fair value gaps step in, because obviously we know that fair value gaps, what they mean is it's been a high volume in one direction. So basically it's broken the natural structure of the market, and obviously we can use this in our favor, especially knowing if we get the high volume between the psychological levels, we can use these both together to have a better confirmation that we might react as we want to. So now we know this, basically what are we going to do? We are going to come to the 5-minute time frame. Like I said before, we're going to come to the London Open. We can trade it as well in the New York session. And basically we are going to wait for high confirmation, basically high volume in between the psychological levels, and then we're going to use the psychological levels to enter the market. So let's come around here. As we can see, we have some high volume candles right here, but not big. There's no really big volume in it. So let's scroll through to see if we see anything nice. Here we got one. We got the fair value gap exposing high volume. We can see that these 3 candles have overtaken these 3 red candles basically. And now what we need to wait is for price to come back to our psychological level. If the fair value gap is in between the psychological levels, we are going to go to the lowest one. Okay, we're going to look for some buys. So basically when the price is coming up, if it drops back down to here, I can enter a position here. But obviously for this to happen, I need for this psychological level to validate. So we're always going to go one psychological level behind of the last validation level. Find this, obviously it's the last one that has been touched. So in this case, this level has been the last one that has been validated. So now we know this. Let's see what the price does. It comes back here, it hasn't touched up here above. So obviously we're not going to use that one. So in any case, you can still see that it worked perfectly. And now we have another burst of volume around here, this nice burst of volume. And here the option that we got is that basically we have this fair value gap and this fair value gap in between these two psychological levels, and we can use this one down here to enter a trade. So let's see what happens. We get another burst above. And obviously this one has invalidated all these because this has got even higher volume. So now we're going to be looking at this level down here. Let's see if it touches. Perfectly, it touches. So this would be where we would be entering. So basically we'll be shifting our buy limit depending on how the market moves. So I'll be basically adding a limit here. So let's add the limit just down here. And I'm going to click my stop loss just below. Okay, I would say like 1 pip below, maybe. So 10 ticks, 10 points. And our take profit is going to go with a risk reward of 1 to 2. So I'm going to be aiming for this round number here. So basically I'll just put it just before the level. In my experience, adding the take profit just before the level always works better. And I'll be risking a 1% in this position. So I'll place my order, and as you can see, it's entered like we saw before because it touched. and let's see how it develops. Perfect, and there we go, got our nice take profit. We could even aim for a 1 to 3, and that's how the strategy works. Now what happens, we have another burst of volume here, and this fair value gap is between these two here, so I'll be basically looking to buy at this price here. So let's see what happens here. Price continues going on. It seems like it might reverse down, and finally it seems it's going to touch. Perfect. So now it's come down here, it's taken the liquidity of this fair value gap, and we have this psychological level, so we're going to add a buy limit just here. So let's add it right there and place the order. Let's see if it doesn't hit our stop loss. There we go, we got 1-to-1, and here's a little adding that I want to tell you, that when we reach 1-to-1 risk reward, I'm always going to protect my position. So now once we've done this, we're going to take our stop loss right here above, and that way we always are protected just in case the price doesn't go completely in our favor. We could add as well here that we could take half of the position off if we wanted to, but in this case I just prefer to protect it and just leave it run, and that way I don't have the pressure of having to leave it run without having myself protected. So now I've got this, let's just wait for the price. There we go, it comes back down, no problem at all. Let's see if we get any other fair value gaps that we're interested. Here we've got a nice fair value gap, as you can see. Burst is in the middle of these two round numbers, the psychological level. So now we'll just wait if the price comes back up to our psychological level, like it looks like it will. And there we go, nice touch. So we'll be entering our sell limit just here with our 1%. And there we go. Let's see if the price continues down. There we go. Let's hit our 1-to-1. So we're going to take our stop loss and put it just in front of the entry. And there we go. We hit another take profit. Here we've got another nice fair value gap that we can use perfectly because it's got a nice burst of volume, and we have validated this level, so we can look for entries at this one here. So let's see if it comes back up, and in this case it hasn't. And right now I would recommend not trading anymore, or not backtesting anymore, because if we look at the time, it's already coming up for the evening and we won't get so much burst of volume, and obviously we're interested in high volume sessions, so we're going to go just straight to the next London session. And the best thing is that we can do this with the go to, and we can go to any session that we want, like I say, for the open, the closing session, the New York open, the New York closed, and we can even customize our sessions. And if we finish our trading week, we can even go to next open week. But in this case, we're going to go to the London session to see if we can find any more trades. We can see we've got a few fair value gaps coming down here. Not really interested too much in, well, this one, these two aren't too bad to look for some bounce off here, but let's see what happens. In any case, we would have our order placed here. Now it gets even a bit more interesting because we've got 3 fair value gaps. In this case, this one's been consumed, but these two haven't. So let's see what happens. This one get validates. Now we could enter in this level just here. So let's see if the price comes up. See, validated this level here. We won't be entering in this one because obviously we don't have any fair value gaps. So let's see what the price does. It looks like the market is starting to shift on the upside, so we must keep that in mind as well. Let's see what happens. And perfect. Here we go, a nice fair value gap that we could use. Let's see if the price comes back up to it. In this case, we would have hit a stop loss because price burst up like nobody's business, but in any case we need to place our sell. We'd have to place it here because we have fair value gaps in here, so let's just place that there. Shame because it literally just touched the stop loss and came down, but in any case it went up again, so no problem with that. Just now we have another massive fair value gap here that starts from here to end here. Here where it can get a bit complicated because we can use this level, we could use this one. Now, it depends on your trading style. If you want to be more aggressive or you want to be more conservative. In any case, I would use this one here, just in case the price reacts here and goes above. But in any case, both are perfectly okay. So let's place this one here, place the order, and let's see, it's hit the stop loss there. That's no problem. It's something that could perfectly happen. But in this case, it would, if we were entered at the bottom psychological level, we would have left the position with our break even because it came up, hit our 1-to-1 risk reward, and we would already put break even there. So now we just need to continue to search for a few more trades. In this case, this didn't look bad, to be honest. We can see here, obviously I'm not going to take it because I couldn't actually say it live, but this one here, we had this nice section of volume here invalidating this big candle there. and we could have taken a trade here because out of fair value gap we validated this level and the price basically bounced off this one, and it came, in this case it would have been a break even, but in any case we can as well take a chunk off when we get to the risk reward of 1-to-1. But obviously this is for another video. If you want another video about this, just let me back down in the comments and I can make another backtest with a different risk reward. But in any case, let's continue with this one. We've got a nice fair value gap here, another huge fair value gap there. In this case, this level will be our entry level because we've got a bigger fair value gap there. So let's see if the price comes down to bounce off. You see it's going forward, and in any case the time is coming to the end because we're already right in the afternoon. There's no volume coming up anymore, so we just need to go to the next London session. And starting this London session, we can see we've got a few fair value gaps here. We could use them in essentially if you want to be more aggressive, coming down to bounce off this level here, but obviously I prefer more burst volume like this one here. That would be nice for the price to come down here. And there we go, the price comes down, takes all the liquidity, all the fair value gaps, and let's see if we can get a nice trade out of this one there. It's coming near the stop loss, and it's hit our stop loss, no problem at all. At the end of the day, we've got a risk reward of 1-to-2, so the stop losses aren't any problem here, and we get another nice zone here that we could use here just above. So let's see if we get to it. There we go. There we go, our position. Let's put our sell limit just above here, place the order, and let's see how it performs. Another cool thing that we can do on Forex Tester Online is if we come to the actual position, we can click right and go to an order close, and there our order is directly closed. So this will save us tons of time as well. If you don't want to see the actual price action and you just want to see the result of the backtest, this will save you tons of time. Me personally, sometimes I like to look at the price action to see how it reacts and see if I would, obviously if I need to add break even or not. But if not, you can see that basically it came here 1-to-1, protect our position, and the price went straight down. In this case, if we could have even left it go a bit further. And this will depend a lot on your trading style. If you want to leave at the risk reward of 1-to-1, 1-to-2, 1-to-3, if you want to let it run until it comes back and use a trading stop, anything, whatever works for you will be fine. But just so you know that these two concepts together with a basic risk reward of 1-to-2 works really, really nice. And now we've finished the backtest, let's check out these results. We've been trading for 17 days, not even 20 days of trading, to make up a total of $2,500, as you can see just here below. If we come to analytics, we'll see some nice things like the profit factor that has been of 2.8. This is completely massive and probably will be reduced if we do more and more trades. In this case, we did 33 trades for this small test. And as well, we can see that the max drawdown was of $483, so a 4.8% to have a gain of a 25% in less than 20 days. I mean, this is completely crazy. And as well, we have a nice win rate of a 58% with having a risk reward of 1-to-2. So this obviously is perfect because we won't have too many losers, and when the losers that we do have don't affect our performance while trading. And as well, we have the max consecutive profit trades landing at 3, and the max losing trades is at 3 as well. So having a risk reward of 1-to-2, this is perfect as well, because normally we should have the max loss at 6 or 7 trades if we want to have a max consecutive profit trades of 3. So the metrics are really, really nice. And as well, we can see that if we look at the London silver bullet, the performance wasn't so good, having a minus $130 as the average profit. But if we look at the European session and the New York silver bullet and the New York session, we had the best performing trades. Okay, so the Asian session, this would be in any trade that basically was done lately in the New York session and rolled over to the Asian session. We can see that these aren't so well. We didn't get so much profit out of them, but the European, the New York silver bullet, and the New York session have been the best performing. So we can see that the most trades that we had were in the New York session, being up to 20. And obviously this is basically because in the New York session is where we get the most volume, and it's where we get our best fair value gaps because there's been more bursts of volume and we can use these for our psychological levels. As well, if we come up to here, we have our analytics insight, but this strategy is so good that we only have 3 points to improve. But in any case, what I always like to do is come to the trading session analysis, because it will tell me the win rate of each session. And as we can see in the New York session, we had up to a 65% win rate. Meanwhile, the European and the New York silver bullet were below 60. So in any case, I always want to be working after the New York silver bullet to even improve more this strategy, as well as some recommendations that basically we could increase the position size after winning streaks. So like if I get 2 trades in a row on a streak, it will tell me here I can improve by a 2.5% in this case. But in any other strategies, this helps a lot as well, because maybe if I get a streak of 2 winning trades, I have more probabilities that the 3rd trade is going to be a winning trade, as well as try using time-based exit rules or trailing stops that we can add on perfectly, and they'll fit really nice. And if you would like me to backtest this strategy in a different asset or with some other configurations that you can leave me back down in the comments, I'll be happy to do this if this video has much love and you subscribe to the channel. And as well, please don't forget the massive discount coupon that you got right down in the description, and that will help you to get Forex Tester Online for a cheaper price. And remember, with the lifetime, you'll get all the new updates without any extra fees. I hope you're all good. My name is Jack. I hope you have a nice Christmas and New Year, and I'll see you next time.